I reviewed Donald Trump's tax returns from 2015 to 2020. Let's dive right in. First, I want to start with his 2015 tax return. It's pretty long, 539 pages. The tax return reported nearly 400 Schedule K-1s, lots of real estate, business, and investment income. The taxable income for the year, though? $0. The Schedule A showed a $21 million donation to charity, but it wasn't a typical cash donation. It was a conservation easement, an agreement between the IRS and the taxpayer that limits development and land use to protect the land's conservation value, while providing tax benefits to the landowner. Trump gave up some of his rights on the 158 acres of land in New York to receive this deduction. It's actually a very scrutinized area by the IRS due to some recent abuse. Moving on to his businesses, there are many activities reported on the Schedule C. We have management services, acting income, and various speaking engagements. The jet business in particular was interesting, as it reported $1.8 million of depreciation expense, which is a non-cash deduction, and a loss of $124,000 on paper, while the business had a positive cash flow. Many wealthy business owners create jet businesses, use bonus depreciation to generate a large deduction, and use them for some personal use. If you look at line 43, part 5 of the Schedule E, you'll notice that Trump qualified as a real estate professional. This is an IRS designation that allows you to take losses from real estate against other income types. You need 750 hours performed in real estate and more than 50% of services performed specifically in real estate in order to qualify. The Schedule D also showed a $323,000 loss by selling securities. He sold Oppenheimer Holdings, Deutsche Bank, Barclays, and a few others at a loss. Personally, I'm not the biggest fan of investing in individual stocks. I prefer the total US stock market ETF or the S&P 500 ETF instead. In 2015, Trump filed a Form 1116, Foreign Tax Credit. It showed gross income from the following countries: United Kingdom, 22 million, Ireland, 8 million, India, 2.9 million, Panama 1.7 million, Canada 1 million, and some other countries. This really shows how global his operations are. Moving to the taxes paid, the IRS tax code has what's called alternative minimum tax. It helps ensure the taxpayers pay at least a minimum amount of tax despite all the losses and deductions. Since Trump had various loss activities and deductions, he's subject to the AMT tax of $2.1 million. Trump's total tax liability for 2015 is $2.1 million AMT, $39,000 self-employment tax, $48,000 of household employment tax, $6,000 of additional Medicare tax, totaling $2.2 million. Now you have to make sure you pay your taxes by the 4/15 deadline, even if you're extending the filing of the tax return. Trump ended up paying $39,000 in penalties and interest by not doing so. You would hope his tax advisors would stay on top of it after paying $500,000 in tax preparation fees. He actually fired them later in 2020 based on the filings. Moving on to 2016, the return looks similar to prior year. We have huge losses generated from partnerships and rental real estate business that offset various business incomes. This time though, the real estate development activity generated $2 million in net income. It was reported on Schedule C, subject to the 15.3% tax of self-employment. If this was a true development business, S Corporation could have worked well to save money on payroll taxes. S Corporation is not recommended for rentals though. One thing I've noticed in his 2016 tax return is the $26 million credit. It was obtained due to his $131 million investment in a historic structure. This relates to the old post office that Trump acquired. On Schedule E, I've also noticed interesting rental activities. Palm Beach single-family properties had a $250,000 total net loss. Property A had $0 of income and $233,000 of expenses, including $142,000 tax expense. Property B had $75,000 of rental income with $91,000 of expenses. Not a good ROI. In addition, if property A was vacant, expenses are only deductible if it was held for rental purposes and not for personal use. 2017 is the first year that Trump became president. I've noticed that there were non-passive income of $10 million and losses $51 million from the Schedule K-1 reported. Now, in order for these items to be classified as non-passive, Trump had to materially participate in his businesses. You must meet one of the following rules: 500 hours spent in the business, 100 hours and at least as much as anyone else, or materially participated in 5 of the 10 preceding years. 2018 is the first year that the Tax Cuts and Jobs Act went into effect. The SALT deduction was capped in $10,000, resulting in his deduction to decrease by more than $10 million in that year. Due to that $10,000 limit and exhaustion of the previous net operating loss carryforwards, Trump's taxable income for the year was $22 million, the first positive taxable income since 2015. This resulted in the total tax liability of $10 million. He also received a $9.9 million of tax refund due to the overpayment and various tax credits. Just a reminder that a huge tax refund is not a good thing. It's simply giving the IRS an interest-free loan. Moving to 2020, this is one of the lowest years for Trump's income. He did not have any capital gains reported on Schedule D, big losses reported from business income, real estate, and partnerships. In addition, this is actually the only year that had $0 as donations to charitable organizations. Perhaps this is in part due to some economic losses and lack of demand for vacations in 2020. In summary, here's how much taxes was reported each year prior to various tax credits. 2015, $2.2 million. 2016, $2.8 million. 2017, $7.7 million. 2018, $10 million, the highest year ever. 2019, $800,000. 2020, just $271,000, the lowest year. If you've enjoyed this video, I would really appreciate it if you can subscribe and leave a comment. Let me know whose taxes should I review next.